Recording. And so I have to do the legal part of the disclaimer first. This is Simon with Trade and Perform Coaching. We're doing the trade review for, what is today, Wednesday, the 22nd. And any trades discussed are for educational purposes only. And obviously, please go through and learn about futures before you trade them. You can lose your ass. Can't say it any clearer than that. You can lose all your money trading futures if you do it incorrectly. And it's a very aggressive, high-risk business. So I think that covers it for now, and we're going in. So the first thing that I want to discuss, we just covered, right, both the options and the position. We closed out 2103.50 effectively, right? Look at what the market's going on, what's going on right now. It's very hard to bet on a close at the low of day. I don't know how else to put it. Even in the best setups, too many people press for the short. I would just print this chart, and every time you want to go in and go, hey, I think we're closing on the low of the day, just print this. We're in a bull market, guys. The market's near the highs. It's not near the lows. There's been no damage done. No one is fearful, right? Always put yourself in a position of thinking what drives ES? What drives ES are pension funds, teacher retirement systems in Texas and California, BlackRock's, Fidelity's, Schwab's, AIM Capitals of the world, right? Those guys have long-only mandates. It takes a lot to shake those guys because they have absolutely no incentive to day trade or bail out, okay? So if you pile in short, there's two people that got smoked here, okay? People who got emotional and said, I missed it and got to jump in here because we're going to zero, okay? And guys who got good location but pushed their trade too long and didn't take scales. That's who gets smoked in this, okay? And everyone else did just fine. The guys at the mutual fund looked at this day today, and if you look at where we are from a couple days ago, let's go over to the volume profile. Look at where we were from a couple days ago. We were here, it's July 22nd. We were here July 7th or 8th, right? No one is sweating this down day. Who cares, right? Put yourself in that mentality. It's summertime. There's no driver to get us to the downside. If people wanted to panic on Apple and it was terrible news, they would have destroyed it in the morning. They didn't destroy the NASDAQ or the ES. They just didn't drive it straight back up to the highs, which is understandable. And if you look at the bigger picture, right, this is the 50-60 retrace. This is the 50-60 retrace. And remember, yesterday after the close, we drew the 50-60 from this gap up to the high right here. And look where we came. We pointed out yesterday. If there's going to be responsive buyers, I said right at that open gap in that 50-60 retrace. I didn't say it like there's going to be open buyers like I know, but dude, everyone looks at the 50-60 retrace. There was responsive buyers there. The way that it came, unfortunately, it would have been nicer if they trailed it in, but they didn't. So let me pull up the homework here real quick, and we'll jump in. What's interesting? Excuse me. Okay, so let's jump in. And let's just go down. What I'm going to do is go down the homework questions down the line. I actually had Brian, who I've been working with one-on-one over the last couple of days, and he actually had some interesting questions. And so I'm going to kind of, after I cover the initial questions, I'm going to delve into his questions, and we're going to run the trade review in that manner. He had some really good, reasonable questions, I thought. So, so first, define the current range. Easy enough. 21.26 has been the high. The current swing low that I'm working off of is this 21.8386. And then we had this open gap down here, and we still have one more open gap way the heck down here. We didn't leave very many open gaps on the way up last time. This is the next open gap at 20.69. Okay, so and are we at the top, middle, or bottom of the range? I'm going to argue we're in the top quarter of the range still. That I would say no damage has been done. This has been a 50-60 retrace. We might push back to this 2100 maybe tomorrow. But my guess is we're going to make another assault back up. Why? It's summertime. There's no bad news. We can look at the economy and the market. I see, even though I try to ignore it, I see all the bad news people talk about. But even with all that bad news, who cares? Like, seriously, who cares? It's Greece. Greece couldn't kill it. I don't see what else is going to kill it. Even if everyone is smoking crack and the market is much higher than it should be, I've heard the same story for 3 years in a row. Buyers are in control, pure and simple. And if you're a day trader, even more importantly, you shouldn't give a damn about what's going to happen 6 months down the road, because it just doesn't matter. Not today. All we care about is making money today and protecting our capital for tomorrow. Okay, so next part. Let's go to the first hour here. Let's open the chart up. So I'm going to tie this back into the preview in the morning, right? What I go in and draw, we came up, we draw, open drive higher, looks 3 bars higher, right? We knew that we were going to open up at an extreme negative tick. Responsive buyer stepped in immediately, open drive higher. I pointed out right here, I think 2108. So the first step, open drive higher. Really easy process here, right? How do we avoid the knee-jerk reaction of stepping in and going, oh, it's going to roll back to the downside? Very, very simple. Just go in there and say, I'm not going to trade the first half hour. If you avoid, the only way to have gotten long with low risk is to have gotten long somewhere in here. And guess what? That meant you had to go long against coming into the open gap from underneath, which if you go back and look at history, about 50% of the time results in rejection and a push back down, right? So let's erase all this. Someone asked me to be brief, or attempt to be brief. I'm not sure I'm actually constitutionally capable of doing that, but I'm going to work on it. Okay, so you skip the first half hour. That puts you at 9 a.m. Guess what? Just after 9 a.m. we hit a new high, but that meant that you did not have a chance to get run over from 2103 all the way up to 2111. The high is 2112, right? And you avoided the 12 point from the 2103 to 2112, 9 points. Is that right? Yeah, 9 points. You really only risked, if you just dying to short, right? This left you with the only area, and you did not get smoked all the way up here. And I want to reiterate something. It's not a matter of did the zones work or did the zones not work. The zone, we pushed right up into the first zone. We got 2 points of rejection. It was a question of two things. How much psychological capital did you have to expand to get that short off, right? Because for me, when I see the market driving straight up, that's always a nerve-wracking event. Number two, how much emotional capital did you spend? And number three, what was your RR, right? Obviously, there was still clearly another, from 2108, there's another 4 or 5 points to the upside and 2 points to the downside. It didn't make any sense to me. And more importantly, I said that right here on this bar, that we just swung to a swing long position. And I went through in the morning and said, hey, there's just no way that I can take this trade. I've got too much risk to the downside. So what did that leave me? In a neutral position and wait. It's still the first half hour, no big deal, right? So the opening range told us that we had an expansion of range from the prior 2 days. And it also told us we had a lack of the ratio of counter rotation to upness was very, very small, right? We basically had from 2103 to 2108, that's 5 points of up and 2 points of down. That's a terrible ratio up and down and worth passing on. Okay. Obviously, the range was greater than the same period prior day. What was the day's range? Greatest move up, greatest move down. So I would say the range was ultimately we were in balance, oddly enough, is what we ended up with. The biggest move up, I think, was 2103 to 2112, roughly. You can go measure it down to the tick. So what is that? 2113, 2112, 9 points up. The rotation, the biggest rotation down, this is actually only 09 to 03, 09 to 03, so that was only 6 points. This was 12 to 04, let's call it, so that was 8 points. So actually the largest rotation up and the largest rotation down took place in the first half of the day on both sides, and we ended up with balance, right? The market ultimately what the market ended up doing, look, we left all of this poorly. So guys, and I'm going to aim this mostly at the guys in my room. I'm not going to try to explain every little step to the newbies, although I do my best. Look, this whole thing was left poorly auctioned, right? So what do? We came back and we re-auctioned most of it, right? We left this little bit right here unauctioned or poorly auctioned, right? So what did the market decide to do from here? We just came back down and said, hey, let's go take care of it. And we retested and rechecked prices up down here. Once we did that, the auction was completed. Boom, pop back up to the upside to re-examine these prices over here, which is what we're doing on the close. Okay, so we'll keep moving into the trade setups here in just a minute. Was NQ in sync with ES? Hell yeah. Look at the open. NQ drove right out of the gate. It made it really easy to figure out that, hey, I better think twice before stepping in. Let's go look at that. Hello, right out of the gate. Look at that opening candle. What is there to think about after this candle, right? Just put your hands up and step away. Somebody is caught in the wrong direction there, but that's not a candle to go, oh, fade it, right? That's a candle for me to go, buyers are in control here. I'll step aside and let them get exhausted. Easy enough, right? Clearly NQ drives, ES drives out of the gate. Next question. Oh, let's see. Where did NQ close, relatively speaking? NQ minus 51. ES. I'm going to say NQ is the weaker net on the day over day. Intraday, I'm going to go with. Let's look at that. Let's get rid of all this pre-flushers. Intraday, I'm going to go with equal, right? We closed right back up near the intraday high of the day. I'm going to say actually ES was stronger because it came back up. Well, no, it didn't close the gap there either. I'm going to go equal on both of those. The action was equally mirrored, and the push-ups at the end of the day were equal. I'd say that we're in lockstep with each other, right? So let's get this fixed. There we go. Next question. They were imbalanced. Neither one was stronger than the other. Was NYC tick showing balance? Well, it clearly wasn't showing balance out of the gate. Let's see if I can find it here real quick. Let's put tick up here in this chart, and then let's just move it to 5 minutes so we can see it easily. Oh, actually, I stand corrected. Plus 600. It was imbalanced most of the day, and that's exactly what we got. Pushed to new lows, pushed up, got responsive sellers, pushes down, got responsive buyers, balance all day long. And that's a pretty easy way to measure those two. Okay, and then let us, were we one timing? We're not one timing in any markets anymore, right? So why is that important? We're now going to look for a change in character. I would expect more two-way action on both sides, and I imagine the market's going to want to consolidate. Okay, so number one, nothing has to change. We can shoot right back up to the highs and keep going up, right? It does not mean that we're going to shoot straight down, shoot straight up. I'm just going to look for a change in character. Since we've been going straight up, the markets generally don't make a U-turn. I'm going to look for more balanced markets, which what will those be characterized by? First hour, we'll have smaller ranges. New highs will be able to be sold back in the middle. New lows, which I'd actually prefer to take because we're in a bull market, we'll be pushed back up into the middle of the range. So we'll look to see if we get confirmation of that in the morning. Where are the gaps? Open gaps above and below. Clearly, I'm going to go back to the volume profile. We have an open gap now sitting here. We have the year-to-date high, and importantly, a trap point. That 21.22, right? That was the old point where we failed from, and then we closed back below. You see that we just backside tested it right there on this open when we pushed up, right? It's clearly this 21.22 to 21.26 and a quarter. Very, very important area. We've got to get above. Obviously, we're not going to want to be getting long at 21.24 anyways. The only question is, does it reject out of this area or not? And the size of the rotation and the price action will help us answer that question. We don't have to know that answer right now, but that's the critical area above, along with the open gap at 21.1450, and that'll be the first important test on ES to the upside. Where's the 200-day moving average? It's way the hell down there. No point even asking. What type of price action did the market display during the first hour? Obviously, open drive higher, lack of rotation right out of the gate. And then as we move through the day, we move to choppy and balanced. That's pretty easy. If the move wasn't balanced, which it was the rotation size from low to high and high to low? What was the rotation size? We already covered that right at the open, right? They were pretty much equal. What part of the day had a larger range, AM or PM? AM had the larger range, clearly. Then let's just do the mental trade review really quickly. These are the questions you should be asking yourself every day. Obviously, everyone knows I have my trade plan down, so I'm just going to state the question and make sure y'all have it. Did you have your written trade plan out on the desk while you were trading? Did you follow your own rules for entry, exit, and stop? All of those should be pre-planned, guys. Pretty straightforward. If it's not, write your trade plan. Look, a shitty trade plan is better than no trade plan, hands down. If you're not working with a written trade plan giving you some kind of guidance for your decision-making process and you're flying by the seat of the pants, it's just a matter of time till you have a disastrous day for 90% of us out there, okay? And what I mean is emotional meltdown followed by overtrading and taking a crap load of small stops or one very, very large stop. Either way, it doesn't matter. Write down your trading plan, follow it. If the trading plan is lacking, work on improve the trading plan. But don't go, my trading plan doesn't work or I don't need a trading plan, because hell, Paul Tudor Jones needs a trading plan. Why don't you? You know, and he's the best. So let's think about that. Let's see. Did I trade after exceeding my maximum stop loss for the day? Don't do that. Pretty simple. Don't destroy your account in one day. There's no point to it. Did I feel frustrated any part of the day trading today? Actually, I didn't. Today's the first day. I felt great about identifying that open drive higher, that there was a swing trade in play. I didn't throw on a short. I didn't insist that the market had to go down. I just stood aside and waited till my next opportunity came along. Did I judge my performance based on the amount of P&L or based on the following the trade setup and execution? I can tell you I felt great about how I set up the trades today. I was very happy with my own performance, and I can tell, at least from the feedback in the room, that a lot of guys were and gals were very happy with the way they set up their trades. Okay, so I thought everyone conducted themselves, from the feedback I've gotten, really, really well. So now let's jump into the nitty-gritty here, and I'm going to go off these questions that Brian submitted to me. Maybe I'll start that once a week where someone can submit trade review questions, and I'll go off of their questions instead of my own. Let's see how this works out. I'll wait for the feedback. So number one question. Okay, so what type of day was it? Balanced day. Pretty straightforward. On a balanced day, you'll establish a high and a low, push to new high, push back in, attempted push to new low, push back up into the range. Okay, does everyone see that? Let me take my time to highlight it. High established, a push to new high, a close back in, push into the middle. The lowest, a push to new low, wasn't dramatic, but it was a push to new low, right? Exhausted the sellers, closes back in, right? And then we short squeeze everyone back up. That is pretty much classic balanced day price behavior. Okay, so Brian, if that didn't make sense, send me a message or let me know. Okay, so let's keep going. Okay, number two. What were today's swing setups? Okay, fair enough. This was the first swing long setup right here on this bar, I believe. It was either this bar or this bar. I'm pretty sure it was this bar right here. And so the most aggressive entry would have been 2107.75, Brian. And the stop was the problem here. Would have required a stop of at least 2 points below this swing low, which would have put us at roughly 2101.50. And there's a couple of problems with that. First of all, that put you right. If it had pushed down, it could have easily just pushed right to that point, stopped you, and then pushed back in. Secondly, that's a stop from 2107.75, 2108 to 21. It's a 6-point stop. It's a big freaking stop, right? but this was the most aggressive entry. The next point would have been to use your 50-60. Okay, so this is the entry that never developed, right? So your entry would have been, at this point, would have been right here. And your entry would have been this 21, let's just call it 2107, for lack of a better conversation. It came right to 2107. And it came right down to, 21, I apologize, 2106 would have been the entry. And it came right down to it, and it knocked right on the door. Here, I'll expand this a little bit so everyone can see it. And when I get to the end of the day, yes, my mind gets a little mushy. 2107, 2106, I don't know why I keep inverting that. Welcome to ADD land. And this, obviously, we just came and just knocked on the door, and we were just not able to push down to that 50 retrace. So no entry there. The best entry would have been, this plays out later in the day, the one of two places. Either we would have come down and tested this 2100 and a quarter, and then popped back up and locked back in here and pushed up. Okay, that would have been the best entry. Meaning your entry was from here and then it pushed and just rolled into a swing trade. Or the next entry would have been, let's just say it came down, broke a new low, and then closed back up into the range. That would have been the best entry to the upside. I'm going to also come in, because if you would have looked, I posted up a trade later in the morning, which took place over here. There was a setup. Okay, so if you keep with that concept, and I drew this out, see how we had the 50-60 retrace here? And the normal pattern for a 50-60 retrace, for those of you who are only trading fibs, right, is to, everyone and their brothers watching the 50 retrace, because everyone tells them it's the, the promised land is the 50 retrace, takes the 50 retrace. Very common. This is algoed out at probably the majority of the hedge funds in the world. Come in, suck everyone at the 50. Every retail trader is trading with a 1.5 to 2 point stop. Run them out of their 2 point stop at the 62 retrace, and then jack it up to the upside. It's pretty much, it's just textbook. It's easy. This swing was no longer, the long side swing was no longer in effect at this point on this trade. And I'm on the 21st, forgive me. Here, I'll switch back over. It was the same chart essentially, but we'll switch back over. Let's just close this down. I did it this morning. There we go. Let's get rid of this. There, now we're back on the same chart. So I'm going to draw that again so everyone can see it. Okay, so here to here. So I pointed out, and I forget, I believe I said 21. Guys, I forget where I called the trade this morning, but it was right in here, 2106, 2105.75, something to that effect, right? And we missed by just a hair. I think I said 2105.75 because it came to 2106 and bounced first, then came in and tagged that 2105.50 and pushed up, right? If you'll also look from swing high to swing low, we get boxed. I didn't have a swing short set up here, but this was a clear target back up. And I want to point something else out, right? In the room, I was showing, let me grab a blank chart. Okay. Look, here's structure right in here. Okay. This is your, so the thing that people have the hardest time with trading is putting all the pieces together at one time, right? Like maybe you have a 50-60 down. Maybe you understand what structure is. Maybe you understand rotation size. But putting that all together at one time to get a trade out of it and be consistent, that's harder, right? So we identified that this was an area we wanted structure-wise. We know that the people that they run to the 50-60 retrace and stop running back. So now this becomes attractive, right? This is the very bottom area right down here where it was poorly auctioned. And if we go through, what do we know about poorly auctioned areas? I'm going to have to get rid of this one. Hold on. Let's see if I can cover this really quick. What do we know about poorly auctioned areas? The market likes to come right into a poorly auctioned area and reject out of it. So when you put A plus B plus C together, you get a response of buyers very likely first time into this area. And that's what we got with the move back up. If you didn't get it, no big deal. Someone else asked a very good question this morning that I want to address, which Mari asked me. Because he was spot on, and yet I didn't like the trade. And I'm going to show you what the trade was. Mari asked me if I was going to short 21.11.75 right here, right? We literally, I posted this chart last night, nailed it right to the tick. And what did I write? White zone, buyers in control above, i.e. sellers are in control below, right? Why didn't I take this trade? Because A, I didn't have a swing short set up, number one, on my primary swing indicator. Number two, we were still in open drive higher and the trend hadn't broken. Number three, what's the rotation size here? From 2103, I was really looking for us to get possibly up into this area was a possibility and then fail back below. So it just simply did not meet my criteria for being aggressive on the short side of the trade and nothing more. That's me knowing what my trade plan is and staying within that plan. Very simple, right? So I forget what trade we pulled out next. He's gonna Brian, I'm gonna go through this. The next entry, the best entry of the day, I'm gonna skip right to that, right? Because that's gonna be the easiest one to set up. And we called it in real time in the room. Okay, and I said right in here, first of all, over New York lunch, slow, choppy, and grindy, right? Remember, when we're in a bull market, guys, people get overcommitted on the short side, try to push the market to the downside. I was showing this wedge. This wedge got broken to the upside, tested one more time, and pushed. I was not here during this time of day, and even if I was, I wouldn't have wanted to trade it. Holy moly, talk about a long freaking afternoon of waiting for that extension to take place. That whole movement of time, right, if you're going to try and trade this whole time period starting at 11 a.m., 2108, 2104.50, that's just over 3.5 points of range, right? That went from just before 11 all the way till 1 o'clock. That's 2 hours of, if you can keep your mental focus through there, you're a better person than I am. I can't. And not only that, look at the anxiousness that I would have developed, right? Like, I'm looking at this and I'm seeing this here and I'm going, well, we're stuck below Tuesday's low. We're grinding down. And this is the same mistake every trader in the world makes. They look and they go, dude, we're going to go break new lows. They overcommit at the bottom, and all they did was squeeze them up, right? So just read the price action, read what the tick is telling you, and believe it. One thing that traders really make mistakes on is they make a mistake between what they want to happen or what they imagine happening in the price action and what is really happening, right? Believe the chart, forget your ideas in terms of what the chart is or isn't doing. Just believe what you're seeing with your own eyes, right? Trade what you see, not what you want to see. Best way to describe that. Okay, so let's roll all the way over to the day. We survived the open. Let's survive the open drive higher. We had good trade location first time in over here, and we had finally at the end of the day, I get a swing short trigger right in here, and I went through. I said the most aggressive entry was on this bar right here at 2108. The next best trade, and I'm going to expand this so everyone can see this, because I stepped right through and then it followed exactly what we needed to see to make it work. So we're back up to retesting an area that's been tested multiple times. So I needed something additional than just taking the trade naked. That additional was my proprietary swing indicator signaled short, right? Okay, so now we go to the next step. Here's the structure. Everyone can see it, right? That's the structure right there. And I said, if we close, the first entry was the most aggressive here, 2107.75, 2108. The next would be a 50-60 retrace right in here. which I can draw it for you if you'd like to see it. It would have looked like this, which essentially puts you right back at 2108 anyways, okay? And then the best entry would have been, since we didn't have any, this area's already been tested, there's no zone unless it really breaks higher, right? So a push up, then a close back in. You have that right here, guys. Push out, a balance. We have a, remember, we have a swing short in effect. Close back in right here, break, goodbye. We did this two ways. When we were on my most aggressive entry, I sold the 2104 calls for, I think, $90, $89, the binary options. And then I shorted the futures when we closed back in here on half size, target, low of the day, pretty straightforward. Okay, so the only thing we didn't have in here was price action to help us out. So I mean, it just doesn't get any better than that, right? Pushes up, closes in, highest odds setup, and then we flush to the downside, and here were the covers. I'll show you where, because that was an important part of the trade too, right? So I want to show you something. If you get greedy on this trade, okay, you got your butt kicked, and that really sucks. Hold on a sec. Oh, where was the stop, Brian? Good point. I'll come back to that. Hold on a second here. If I can figure out how to erase these lines. Okay, my stop on this is 2110.50. Why? This is my zone, 2108 to 2109.50, and I want to make sure that I can come up and test this 2109.50 and leave a point behind. I just thought it was a possibility that we could get up here. Obviously, that isn't a stretch, right? So my entry was 2108, and my stop was 2110.50, 2.5 points. It was quite a reasonable stop. Usually my stops are closer to 4. My first scale was when we pushed down to this 2106 plus 2. I left my original stop. When we pushed down to 2105, this is about the bottom of the trading range where we balanced before. I scaled again. The options at that point that we sold at $90 were worth, the first scale was about, I want to say 65 or 70. I don't want to pull up my blotter right now, but I think it was 65 or 70. That took, I was able to cover half and cover all my risk for the entire trade. There was no way I could lose money. As a matter of fact, it locked a profit at that point. Then I let the rest ride as we were coming in towards 55. I covered a few more. Then finally, when we went this 2104, remember I sold the 2104 calls for 90. We're pushing down towards the end of the day. This is a good stretch relative to the price action we've had all day long. And those pushed down finally into 45, closed the position out. I covered the last piece of the futures trade at 2103.50. And you just simply can't ask for a better day than that. And this is exactly why you should not stay short through the rest of the and try to push for a close on the low of the day. It's just very, very rare. First target was 2 points. That's pretty standard, and it came nice and quick. Brian's next question is, oh, why was my stop there? I think I addressed that already. First target, I addressed that. Next question is, how do I determine when to move my stop? Generally speaking, after I've got more than 3 points, 3 to 4 points in trade, I move my stop. Brian, that is a matter of personal judgment, right? If you think you've got a larger trade on your hands, then you want to leave your original stop because you want to be able to handle the wiggle. If you think this thing's going to turn around and reject after you've gotten a turn, yeah, you want to bring it in. And after we got 3 or 4 points, I moved my stop to net break even. And then finally, you just don't want to try to ride at the end of the day. You got to get the time of day straight because it's very hard to push to the lows at the end of the day. Let me see if there's any other questions. Oh, were there any zone trades today? Great question. Let's see. And I have this chart so marked up, I'm going to have to bring it in. Let's see how the zones did today. Let's get rid of all this stuff. See if that cleans it up. Okay. There were, Brian, they were before 9 a.m. First move into 2108, 2109.50 zone, rejected for 2 points, almost exactly. That would have been a very hard trade again. In the context of open drive higher, I did not take this trade. And then the next zone trade would have been, this already got run over. Really, the only other zone, the 2111.75 plus or minus 1, meaning 2110.75 to 2112.75. That was within the context of open drive higher, but that was a valid zone, I just chose not to take the trade up there. But the zone clearly worked. If I just took each zone, I made money on each and every zone quite clearly. And then the next area that would have been valid that had gone untested all day would have been this 2150 to 2098 to 2099. It never got tested, but this would have been the next logical area to take a test. So guys, I'm going to do the charts and get them posted here shortly for tomorrow. I hope everyone had a good day. Seemed to be one more question. Let me see if I can't get that popped up. Okay, and I think that's it, guys. So anyways, I hope everyone had a great day. It looked like everyone had a great day in the room. And Rick, my pleasure. And we'll see everyone bright and early. Meeting tomorrow morning, 7:45. I'll post the link on Twitter. Have a great night, guys. And congratulations to everyone who had a killer day. See ya.